Hello listeners, welcome to Money Talk with Patrick. I'm your host, Patrick, trading mentor and creator of DC Trading. So in today's episode, I would like to talk more about meme stocks. If you listen to one of my previous episodes, you will already be acquainted with what happened with GameStop stock and Reddit. I wanted to talk more about the psychology behind this type of stock and discuss some of the hottest meme stocks right now. Before starting, please bear in mind that trading meme stocks involves high risk. Always do your due diligence before investing in any asset. So hello everyone, how is it going? Happy Thursday once again. Here we are in Money Talk with Patrick. So today I wanted to talk more about meme stocks. I've already had an episode where I talked with Chris, a friend of mine, about what was happening with UDEMY and gave out some of our thoughts in that regard. Now, I'm gonna do a little bit of a summary just in case that you haven't heard because you were under a rock. At the very least, you're gonna be updated. And also, I'm gonna be giving my opinions on the matter, on the price action, what's going on, and also mention some of the hottest meme stocks out there. So let's start with kind of like this summary. So the GameStop saga has been basically the battle between David and Goliath, between the small retail investor and big hedge funds. This has been the premise for a long time. Now, what happened really was that some hedge funds were really shorting some stocks, basically expecting them to go bankrupt, right? That's why they were shorting, hoping that they could bank some money despite the people losing their jobs and so on. Now, the problem here was that they were overestimating the probabilities of these companies going bankrupt while kind of underestimating the potential of recovery. So this is kind of what was happening. This guy, whose name in Reddit is Deep Freaking Value for the censored version of it, he was discussing his due diligence, basically his research on GameStop, and he was discussing it freely on Reddit, so everyone could really see it, right? Now, while he was discussing this, a lot of people is starting to kind of listen to him and started going on GameStop, and of course, little by little, the GameStop stock started gaining more and more value. And then at one point, people became aware that these hedge funds were really shorting some of these stocks, like UDEMY and AMC. So they started to buying in order to try and short squeeze the funds, these hedge funds, which basically is buying just to actually make them close their positions, because at one point they cannot take the losses. If you're shorting, you know that if the market goes up, you're losing money. So at one point you are leveraged enough that you have to close your positions and you have to buy back. So that's called a short squeeze, because in a small period of time you are forced to just buy back everything, and then there's a spike in the price. So this is what Redditors were trying to do. Now, what happened is that Robinhood, which is a broker in the US, and other brokers stopped the buying of this specific security. So they would not allow you to buy GameStop stock at certain point in time, which created, of course, a lot of criticism. And DFB, the CEO of Reddit, the CEO of Robinhood, and key stakeholders in Melvin Capital and Fidelity, they even went to a hearing in the US courts. So this went to another whole level, and this is basically where we are right now. We already have some of the hearings, but I think there's still gonna be some more to discuss more about the topic. Now, this begs me to consider what's happening right now in terms of the market price and in terms of the psychology, because I think it is kind of like fight between traditional financial valuation versus what it's called herd mentality. Now, in terms of traditional finance, there's this theory which is called the efficient markets theory. Basically, this hypothesis or this theory says that, or states that, asset prices reflect all available information at any given time. So if the price is high, it's because some good news happened, and if that's the case, the price would already take into consideration that news. So basically, you're saying that the price is smarter, or the price is wiser than everyone else. The price states that the market is perfect, and then thus it's unbeatable in performance. Now, this theory, in my opinion, at the very least, is have truth, since the market has a lot of participants who might be unaware of their decisions and might not be fully rational. Now, at some point, this is why shorting is important, and I know that a lot of people think that shorting is just a way to get companies bankrupt, but this is not the case, because shorting, in a sense, helps tackle these irrational, exuberant markets prone to bubble-like behavior. So in a sense, they are trying to do what a traditional finance is supposed to do. It's supposed to give a price to the market, or a correct valuation according to the fundamentals and according to the company's structure and so on. So hedge funds, in theory, this is in theory because it's not always the case, they try to buy undervalued securities and short overvalued securities. Now, in comparison to this, we have this herd mentality. Now, these, of course, do not take into account any rational behavior. That's what is herd mentality. People just follow the herd. People just follow a trend or something that's happening. They buy an asset just because that specific asset is going up. And this, in traditional finance, is called the greater fool theory. So the greater fool theory states that people, or the price of an asset is determined by whether you can sell it for a higher price at a later point in time. So basically, you're buying something because you think that in the future you're gonna be able to sell that in that asset more expensively, so you're gonna create a profit. So this is basically kind of like a pyramid, where every people or everyone who's actually buying into the asset thinks that they will be able to sell it at a higher price, and thus it becomes the greater fool, or the greatest fool, which is the last people that tend to buy that stock or that specific asset, and then everyone starts taking profit, and then the price collapses and it goes down in a really drastic way, like what happened the first time with UDEMY, when it went all the way to 500. And then in a matter of days, it went back to $50. So that's a huge loss in terms of this kind of like a theory. Now, with this theory, people, of course, they don't care about the underlying asset, right? They don't care about the company. They don't care about the financials. They don't care about the underlying reason why that company or asset has value. They just care about the money, and they just care about buying so that they can sell it higher. It's kind of something similar that's happening with Bitcoin. I will be giving my opinions on Bitcoin later on, because just the price has been crazy. It has been going up a lot, also because of potential inflation, but that's a topic for another day. In any case, going back to these meme stocks, going back to this theory, of course, you might expect that this the greater fool theory creates FOMO, right? And FOMO is fear of missing out, which again further impulses the price upward. So basically, you have people looking at the price going up and then buying because they think it's still going to go up, and they don't think that the reason that the price is going up is because of them, right? It's not because the price is just going up. It's because they are making the price go up by just buying irrationally. So most of these irrational behaviors they always see harsh corrections, and ultimately price crashes, as I just said before, potentially picking up momentum once again. So if you were looking at the UDEMY charts, it went from 500 to almost 50, and now it's back up to 300. So that's basically 600% right there. So this is kind of like the market cycles, where there's exuberance. Once again, everything goes up, and again, when you are at that peak, then everyone realizes, hey, maybe this is not a good investment. Hey, maybe this is actually overvalued, and they start selling. Some take profits, some take losses, and the cycle repeats again. Now, of course, this I'm not making this episode to tell you that it's a bad idea to invest, as I'm not telling you that it's a good idea to invest. These are just my opinions and what I think the market is doing, because there's a strong clash between traditional finance and what's happening right now in every chart. I even spoke with Sammy. I hope that you remember from my trading psychology episode, and we were talking about how the market is just irrational, right? It's not doing what you would usually expect the markets to do in certain scenarios. They're kind of behaving this way, and I think one of the reasons is because there's a lot more of retail traders. And I made a hypothesis whether I saw that a lot of the moving averages in these specific stocks, in these specific assets, were playing a huge role. And maybe it is because the normal investor is not really aware of the trading tools that you can have to really see what the price is at or what good opportunities for entry. So they just grab the most simplest thing that they can, and they just trade with that. So that's just a theory. Who knows? But the point is that some of the markets are really irrational right now. So now, to end the episode, I want to talk about the hottest, or some of the hottest meme stocks right now and what they do, so that you are a little bit aware about them. Maybe you want to do more due diligence on them, really know if they're good investments or not, but that's really up to you. So first of all, of course, we have GameStop stock. The ticker is GME if you want to look for it. What do they do? It's a video game, consumers, electronic, and gaming merchandise retailer. So basically they sell physical games, they sell physical products for gaming. Kind of talking about positively and negatives. In the negative side, most media and entertainment right now, what we consume is tending to go fully digital, right? So that's a big constraint that they might have. But on the other side, this gives them the potential ability to recreate its interaction with gamers and consumers, right? So this is why it's also going up, because they have the opportunity to change their entire business model and potentially grow even faster in the future, or even recover right now. That's up to see, but this is kind of like the state right now. Another stock, AMC Entertainment, the ticker AMC. It's a movie theater chain. Now, again, negatives is this digitalization of media and how the growth in digital subscriptions. Netflix, now it's Disney Plus. I think they will have like 5 new subscriptions. You have Hulu, you have HBO Max, and you have so many that you can't even count them. And this is gonna, of course, affect it negatively, because now you can watch movies at the comfort of your own home. So this is something that they need to see that, and potentially the directors, the board of directors, and the CEOs, they have to take this into consideration to see what they're gonna be able to do in the future. But of course, this brings some positives, because there's alternative use of current infrastructures, right? What's stopping them from actually, renting these movie theaters? Maybe people want to do a party, maybe people want to make them the small nightclubs, or maybe people even want to watch movies of their choosing, right? Not necessarily what's in there right now. So there's a lot of opportunity for them to get a little bit more creative. Now, third one, I'm just gonna be talking about 5 pretty much to wrap up this episode, but the next one's Tesla. TSLA, that's the ticker. Of course, Tesla. If you know Elon Musk, if you are aware of SpaceX, you of course are gonna be aware of Tesla. Electric vehicle and clean energy company. Basically, positives. Of course, there's a huge potential turnaround of standard vehicles into electric vehicles, and this is why a lot of people are investing in these EV companies, because, as a matter of fact, if in the future you were to say that all the normal cars, diesel cars, oil, gas cars are gonna change or are gonna be transformed into electric vehicles, then there's a huge market potential for these type of companies. But of course, on the negative, there's a lot of overpriced valuation, PE ratio, which is price over earnings ratio. For instance, for Tesla, it's reaching above 1,000 times, meaning that the price is 1,000 times greater than what they are actually earning. Now, I'm not really gonna discuss that right now, but right now, PE ratio does not mean anything in reality. Before it was kind of like a guideline for you to know if a company was overvalued or undervalued, depending on what the overall industry PE ratio was. But right now, all the companies are really focusing on growth, so this is not really something that even matters. Roblox, RBLX, this is just a funny one because it's a video game developer. They basically have only one game. I think they might have two, but it's a game for kids. Now the positive, maybe it's a very new IPO. It's aimed for kids, this game. There's some potential. They have a lot of player base, but the negative, really, what I see is that it's potentially overvalued. Who knows? We'll see in the future. But usually, when an IPO comes out, prices tend to go down in the very first couple weeks, couple months, when people allow. Well, I'm not people, but institutions allow shorting. So we'll see what's gonna happen with them. But it's definitely gonna become a meme stock just because it's a video game company. And the last one that I want to talk about is Rocket Companies, or the ticker RKT. So these companies, or this kind of like mother company, they involve everything from personal finance and consumer services brands. They include a brand in mortgages, brand in homes, Rocket Loans, Rocket Auto. So they basically focus on making loans and making kind of interest. Now the positive is that they're trying to look to innovate that traditional loan system in a more kind of like, I think, digital version, less paperwork and so on. But the negatives, of course, is that current interest rates are very low, so the potential for profit and for growth might be at its peak right now, if you know what I'm saying, because potentially in the future, if inflation starts coming up, interest rates might go up. But in any case, some honorable mentions. I'm just gonna say name you the ticker in case you want to do more due diligence, do more research on them. It's NIO. That's another EV company, APHA, APHA, which I think it's basically a wheat stock. And then we have BB, which is BlackBerry, and of course, mind that BlackBerry is not doing phones anymore, and NOK, which is Nokia, which again, they're not doing phones anymore, but they're interesting stocks. They're actually trying to do something very new. So do your own due diligence and find out more if that's what you're interested. In any case, traders and listeners, I hope you enjoyed this episode of Money Talk with Patrick. The internet has given us the opportunity to change the status quo and disrupt industries. Remember to always be updated and aware of what is happening around you, and do your research and due diligence before investing in any market. If you like the podcast or have learned anything new with it, please help me by sharing it to others. It really does make a difference. Thank you very much for listening, and I will see you in the next episode. Take care.